Now, as rating agencies have already started to weigh in on the country's unrest, this evening Moody's, which already places the country in junk territory, says the latest looting will be costly for the country. A lower rating simply means the country's cost of borrowing will be higher as the nation is seen as a riskier one. Hugo Pienaar is the chief economist at the Bureau for Economic Research. He joins us now. Hugo, thanks very much indeed for your time. So, as the victims of this looting struggle to come to terms with the death and the damage around them, I suppose, as an economist, you are equally gloomy about the prospects for this economy, aren't you, after the dreadful few days of anarchy?
Well, I mean, it's just first of all, as an individual, the scenes, of course, are absolutely shocking. And I think the impact on the economy, bearing in mind that we are already struggling at the start of the third quarter with this devastating third wave of COVID-19. Now, on top of that, you have these events. So I think the third quarter in particular, you're now putting a lot of pressure in that one quarter. And I think that, so that quarter looks like we're probably going to see a contraction in GDP on a quarter-on-quarter basis. And obviously that then feeds through into the full year GDP number.
One of the most significant indicators, and I suppose consequences as well, of this looting would be what happens to unemployment and the jobless rate in the country. Now, just a couple of weeks ago, we were interested in securing that big investments so that we can put up and expand more factories and businesses. That money, if we do get the investment, now goes into repairing the damage. Very little of that goes to creating jobs. That must be a serious concern for South Africa's probably short-term and medium-term future.
Yeah, for sure, David. And I think it's not only that. It's also, I think, especially small business owners or smaller business owners who were impacted by these riots. So let's say I'm a factory owner. My factory was burned to the ground or looted significantly. Yes, if I was insured, presumably I will get insurance payout it may take some time. But there are no guarantees that individual will actually be prepared to rebuild that factory. So the implication is that from that perspective, there are a number of people that may be out of work because of these riots. And as you rightly say, South Africa already, of course, sits with very high levels of unemployment. And I think especially in KZN, the events of the past week will only worsen that situation.
Hugo, I see Business Unity South Africa, that's essentially the business leadership in this country, today calling for a 24-hour curfew in the hotspot areas. And I suppose the aim there is to just get business activity and factories to restock and business activity to go and get to normalized levels. Do you think those 24-hour curfews will help regain economic activity sometime in the near future?
Well, Devin, bear in mind that we have a curfew, right, from 9 o'clock in the evening to 4 a.m. in the morning. So I think you can have a 24-hour curfew, but the point is you need to enforce it, right? So I think that perhaps is more the issue here. The military is now being employed in greater numbers, of course. I'm sure that will help the situation. But you need to be able to enforce these regulations that are put into place.
You know, often we don't really take into account what the future reputational damage is to some of these events. Moody's just this evening coming out telling us that what happened over the past few days will certainly affect our credit profile. What that simply means is that the government now will find it much more costlier to borrow money. No doubt this will affect its social obligations. So you have a dramatic impact from what happens on your scale to borrow money and how you meet out your social obligations. So that Moody's statement quite significant, isn't it?
It is, but it is interesting because one of the other rating agencies, Fitch, also came out today. And although they are, of course, very concerned about the situation, they actually mentioned that at this stage they don't expect it to impact our credit rating. Of course, the credit ratings have already been downgraded significantly. All of the rating agencies have us on sub-investment grade. And as you rightly say, that is one of the reasons why our long-term cost of borrowing is elevated. Now, of course, I'm not trying to put a positive spin on the Moody's statement, but it's not clear to me that this event in of itself will result in further credit rating downgrades. But what it certainly will do is it postpones the period or the time when we may start to think about a upward movement in those ratings.
Yeah, and it certainly does make our investment case not look all that good anymore. Hugo Pienaar from the Bureau for Economic Research, thanks very much indeed for talking to us.